Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are talking metals and gold. Gold saw a big move. If you go back just about a week, it's up about 30 bucks, but we did have a little bit of fuel in that move. Not only did we get sort of to the end of the selling, we saw a lot of open interest, we saw a lot of positioning getting out. It seemed to be an opportune time to get in right around 1200. But we also got more positive China GDP, which kind of took all commodities and gave them a nice boost. So gold pricing from a technical perspective, we did settle above 1225 on Friday. We maintained that today with a nice extension. I think that's your line in the sand for the short term. If you're a buyer, you want to get out if we get back and see a settle back below 1225. Now, how did the dollar react to all this? Well, the dollar index itself is still hanging right on year-to-date lows. You continue to see it kind of creep lower. Yeah, we see minor upticks here and there, but we are within, swinging distance of the pre-Brexit levels in the DXY, and that to me suggests that there's a lot of more weakness to come if we bust through. We're not there yet. We got to get to 94, but if we get through that, that could mean a lot of upside for gold. And how is the Fed incorporated in all this? Well, we heard from Janet Yellen last week. She's a little bit more dovish, a little more hesitant to commit to any sort of future rate hikes. Even balance sheet talks seem to be up in the air. So I think right now a low for even longer Fed is going to help propel gold higher, at least keep it from going down. Given the idea that gold is a non-yielding instrument, it doesn't have the same favor as say treasuries do or some stocks. But I believe that right now as a sort of a flight to quality bid, you could continue to see it with a Fed on hold, with growth suspect, with inflation nowhere to be found, and likewise with a technical shift. So a lot of things pushing gold higher here this week. We'll have to wait and see. We have a very limited economic calendar. However, we have earnings and ECB later on this week that will always give gold a little bit to trade off of. This is Todd Colvin coming to you from the floor of the CME Group.